Well, the Rezidor Hotel Group has big plans for Africa. It has hotels operating or under development in South Africa, Mozambique, Zambia, Ethiopia, Gabon and Kenya, and has recently opened the first five-star hotel in Sierra Leone. I'm joined in studio now by Andrew McLachlan. He's Vice President at the Rezidor Hotel Group. Thanks so much, Andrew, for joining us today. So the tourism story is certainly a wide-ranging one on the African continent. With example, the Kenyan market coming under pressure recently on the back of security concerns in that country, but then Mauritius tourism numbers seemingly on the rise for now. How does this influence your approach to the African continent right now?
It's the bumps in the road, or the highs and lows don't really influence our long-term sort of strategy for Africa. We, as a company, came to Africa in the year 2000 with our best-known brand, Radisson Blue. We arrived in Cape Town. Since then, we've grown rapidly. Today, we have 60 hotels open under development in 26 countries. And we have a strategy now, between now and 2020, to double that portfolio. And if we look at doubling that portfolio, it's primarily looking at the business market, at business hotels in sort of capital cities and financial hubs. And we're taking a long-term view. So if you look at Nairobi at the moment, it's slowed down a little bit because of the current sort of security risk, but the fundamentals are correct in Nairobi that it will be a city that continues to grow, and we want to be in that market. And there's a lot of similar markets in Africa which have these little bumps in the road, but we look at the long-term fundamentals of those cities and those markets.
Those long-term fundamentals seem to be enticing quite a bit of investment into the Nigerian markets specifically. 2014, we're looking at 8,800 rooms, and that's expected to grow to 22,500 rooms by 2019. Having said that, occupancy rates in tandem are expected to fall from 50% in 2014 to 26.8% in 2019. So the question one asks on the back of that is, the kind of investment we're seeing right now warranted in the first place?
Absolutely. So if we look at Nigeria, it's one of our focus countries. We have two focus countries in Africa, Nigeria and South Africa. Both those countries, we believe by 2020, we should have 20 hotels in each country. So at the moment, we have one hotel open in Nigeria. We have another 6 under development at different stages. And if you look at Nigeria, the long-term fundamentals in Nigeria are very, very encouraging for hoteliers to go into the market. It's got a population of 160 million. You've got Lagos, which is a city of 15, 16 million. It's got an airport which has got the fastest growing airlift coming into the country. The country is opening up. There's more foreign direct investment coming into the country. And with all of that, you need quality hotels in the country. So if you look at Nigeria, it's 36 states. The numbers you're talking about is a countrywide average. So if you're in the north or in the south, the occupancy in a federal state capital might not be that exciting, but in Lagos, Abuja, or Port Harcourt, these are thriving cities. We take Abuja as an example. Abuja has the highest tracked average house rate in the world. It's ahead of Paris, London, or Hong Kong, and it only has 2 branded international hotels in that city, as an example. So there's a lot of scope for growth in Nigeria, but not across Nigeria. Sort of you're going to create sort of tourism routes within the country. So we've identified 10 states of the 36 states where we believe we can have one of our brands operating in.
Okay, so you've got to be selective about the approach you're taking right now. When it comes to that level of investment you're looking at making on the continent, let's monetize it. And what kind of targets have you set in terms of returns on that investment down the line?
Well, if we take a look at our sort of business on a whole, we're not hotel owners. We're not the real estate owner in the business. We're the hotel operator, and most of our competitors work on exactly the same business model. So we operating a hotel on behalf of an owner, and that owner class can vary significantly. It could be the government, all the way down to a net wealth individual who's a trader who's wanting to invest in his home city. If we look at the investment that the owner's making, in addition to the investment we're making from our own sort of infrastructure, our resources, what we're doing from a marketing and sales point of view, from a training point of view, the investment varies significantly from country to country. And that's really got to do with the access to local products and the local skill set. So if, as an example, we would say that a Radisson Blu in South Africa as a cost per key per room would be about 2 million rand a room. So if you would multiply that by the number of keys, that's what the total cost would be. If you're moving across to sort of East Africa, you would say it's anything between $250,000 and $300,000 per key. If you're going into West Africa and into some difficult markets like Nigeria or Angola, it can go up to sort of $450,000, $500,000 per key. So you look at that, so the cost is significantly high, but the return on investment is still actually more attractive in those markets. If we look at the ramp-up period once the hotel opens, it's much faster than it would be in a mature market. A mature market would say hotel takes about 4 years to ramp up. In these emerging markets, it can take less than a year to ramp up. Then your flow through from revenue down to profit is far greater in these emerging markets. So the return on investment is actually greater as well.
To what extent does an island like Mauritius fall within the mature market category when it comes to tourism specifically?
Mauritius is an exciting market. We're about to enter the Mauritian market, and Mauritius is a market that's now seen as a mature hotel market. It has 140 hotels on the island, and it's got some really good upper upscale hotels all the way down to sort of mid-scale hotels. The Mauritian market for a long time was focused primarily on France as its feeder market. During the economic crisis, it had to sort of spread its sort of marketing web a little bit wider and attract other markets. It's got a strong African market. It's got a growing Middle East market. There's two Emirates flights which fly into Mauritius on a daily basis. So you've seen Mauritius turn the corner, and the first quarter of this year, it's got really good occupancies, really good rates, and it's a good time to go back into the Mauritian market.
Okay, so that's some perspective on the tourism sector as it stands on the African continent right now. Andrew, it's been a pleasure chatting to you.
Thank you.
That was Andrew McLachlan, who's Vice President at the Rezidor Hotel Group. And that's where we leave things with you for this week. Remember, Africa Business Today airs every Friday at 5:30 and 8:30 p.m. Or you can catch repeats on our website, bdtv.co.za. From me, Alicia Seckham, and the team, it's goodbye.